How can technology help servicers get better results?
I will say it's a good example of how technology is really fundamentally changing the way the business is done. So, in creating new efficiencies that offset or perhaps give you the liberty to take additional time to get a better outcome. So, for instance, before you have a conversation with the borrower, you can order your default data in bulk. So it's not being ordered after the fact. We find out, oh my God, if we'd known there was that lien, we wouldn't have tried to do the deed in lieu. You can have an informed conversation with the borrower from the very first conversation going forward. The borrower can then follow up with that conversation by hitting their personalized web portal where they can enter their own information, receive some additional assistance to walk them through the process of gathering the necessary documents to qualify them for a HAMP mod or whatever their appropriate workout might be. It'll ensure that all of that information is accurate, complete, compliant with all applicable federal, state, servicer-specific programs, and legible. Amazing number of mods are turned down, for instance, because the paperwork isn't legible. It stores it all in the cloud where it can't be lost. Doesn't have to be faxed repeatedly. And you can then deliver that modification to the borrower and close it with an electronic signature online in minutes, not weeks. So all of that enables massively more high-touch servicing, but yet it's offset by huge leaps in technology.
How can technology prevent redefaults?
There's a number of different things that can go on. First of all, it's the mitigation of the redefault itself, and I think, Steve, you hit it right on the head. You have to stay in touch. So for those of you who are in origination, you know, the loan is made and bang, you're done, right? So in servicing, it's not quite that easy. If I make the workout, I still have the borrower. So I still have to be in that high-touch situation, and I can accomplish that still with technology. Just by reaching out, by making sure that there's no change in employment, right? So the major impediments to performance usually are employment, health, and divorce, right? So I can get an idea of major employment shifts if I'm importing into my cloud of data things that are happening with major employers in my specific areas. So if I know that XYZ company is laying off employees, I should be bouncing that against my database, my servicing database, to determine where might I have impact, and I should be proactive in reaching out. Right? There's tons of technologies around that. The second component to that really is decisioning technology has been with us, from the origination side and now moved over to the default space in the most recent, 3-4 years. And that continues getting better and better, automating workflow, automating rules around that, and managing things from HAMP and private mods. I think the next frontier that we need to take a look at is the meta decisioning. What goes into the decisioning? Because if you take a look at the performance on private mods, basically have a 34% default rate. When the OCC came out with a recent study that said private mods have a 34% default rate, while HAMP has a 19.4. Now, obviously you can say there's a political spin on that, and any set of data can be twisted to prove any particular point, but I think the point that I want to make is, are we looking at the appropriate things? If we're taking a look at classic underwriting structure, is that really what you need to be taking a look at if the borrower is indeed underemployed, maybe he is still employed but underemployed, there's a pay cut, or there's a reduction in hours, or there's a reduction in one worker, in a 2-worker home, did one worker lose, and a reduction of overall household income, right? All of those types of things tend to snowball, and if you're not on top of them, are you making the right decisions about? If you're not analyzing why you're redefaulting, are you making the right decisions when you're taking a look at the workout? And I think that whole iterative process needs to be really examined.
Can servicers use front-end analytics to do workouts?
As a purchaser or servicing for others, what have you. Basically, in the loss mitigation process, you're re-underwriting every loan from stem to stern. You're going through the whole process. We have a crew, and I don't know if Steve does, but we have a crew of underwriters on board, and they look at every loan. And they look through that paper file or electronic file, whatever is available, and go through every aspect of it, looking both at the collateral as well as the borrower's specific situation.
What are the key trends and issues around field services?
The most pressing issues, I believe, are the strict property conveyance timeframes, as well as the HUD mandates and other investor and insurer compliance requirements. The rules are constantly changing. It doesn't matter who the insurer or the investor are. You have to be able to not only stay on top of that, but be part of it. Compliance is involved in all aspects of it. Just as the panel earlier was speaking of, compliance is just as important in the servicing portion of it, due to the ramifications that can come into play if you're not fully compliant with all aspects of servicing on that account.